Hi everyone. In this video we will learn how to make stock analysis. I will show you simple steps to make stock analysis, and also I will give you extra tips and tricks to make stock analysis easily. This is going to be an interesting video, so watch till the end, and once you watch this video fully you will understand how to make stock analysis and you can analyze any stock you want to invest. Please comment below which stock you would like to analyze in the next video. Okay, let's get started. How to make stock analysis. First step, we have to do fundamental analysis, and the second one, we have to do technical analysis. Both these steps are important to analyze any stocks. Please like and subscribe if you like this type of analysis. We will be analyzing different stocks in this channel. Please comment which stock you want to analyze in the next video. To cut the long story short, use fundamental analysis to understand the company's strength and long term potential. Use technical analysis to time your buying and selling decisions. Fundamental analysis is about studying the core of the company, how strong it is, what its future potential looks like. In fundamental analysis, we will study about business, financial health, and competition. So, business is basically to understand what the business is about, and then the financials of the company, and then the competition that business is facing. What are the challenges and things like that. So, once we understand the fundamental analysis, what to do in this, we have to understand the concept a little deeper, like business. So what is in business? So basically, we have to understand the business model. So what the business is all about. Okay, and then we have to understand the products of the business or the company. It would be different products for different companies. Like for example, for automotive industry or the company like Tata Motors, they are into automobiles. So and similarly for company like TCS, they have a different product. So the product would be different for each company. And again, we have to understand the industry in which the business is operating about. Some industries are very easy to understand and some industries are not so easy. And then we have to study the management. It's important to study the management because even the business is doing good, if the management is having some issues or the leadership have some issues within themselves, then that business, the direction of the business probably not going right. I will show you practically how to understand all these concepts and how to find out the information for all this, like the business, the products, and then the industry in which it's operating, and then the management and things like that. So stay tuned, watch till the end. Then we'll understand about the financials of the company. When we understanding the financials of the company, we have to understand the profit and loss statement, ratios and cash flows, and then the balance sheet. When it comes to profit and loss, obviously everyone wants to see that company in profits. So it's very important to understand or to see a company that has a consistent growth in the revenues and also in the profits, and also the operating margins are uh, okay or something like maybe close to 10% or more. Look at the revenue and earning trends. I want consistent revenue growth and rising margins, or clear explanation if margins fell. Look for accelerating or decelerating growth. The directions matters more than a single year's number. When it comes to ratio, there are a lot of ratios available, and most important ratios that we should look at are the profitability ratios. So ratios like P ratio, PEG ratio, ROE, ROIC, and debt to equity, which is more important, and the current ratio. I use these to judge the value of profitability and risk. And most important to understand is that here is that one ratio doesn't decide whether to buy or not. Next one we'll look at the cash flows. Cash flows are, if you go down here, just here, yeah. And if you go to cash flows, you will see cash flow from operating activities, cash flows from investing activities, cash flows from financing activities. I will give you a simple formula here. Cash from operating activities should be plus, cash from investing activities should be minus, cash from financing activities should be plus, and that will give you net cash flows. So now I'm telling you why. Imagine you're doing a business and you sell some of your products and you get money. That's counted as operating cash flows. And imagine you have a machineries, you have to uh, upgrade it, or you have to reinvest into your machineries or a factories or anything like that. Then you have to pay money, and that is why it should be in negative. Similarly, financing activities should be in plus. Say for example, you have invested in some other businesses. When they pay dividend or return on the investment, then it will be profit to you, so the money is coming into your business, and that is why the financing activities should be plus. Next one to look at is the balance sheet. To look at the balance sheet, we have to go here, and you see, if we have to understand the balance sheet, what we need to know, or what is the important thing we should know or understand, is that borrowings, reserves, and investments. So I like to see any company that has less and less borrowings. Let's say, give you an example. If you want to give money to your friend, or let's say your friend is asking money to you and he's already having borrowings, or already he has taken a loan from somebody, or you are aware of it, would you like to invest in him? Of course not, right? That is what the case here. So also, reserves and investments. So reserves are something that company has how much cash in hand. So the more the reserves, which is the better. So similar thing, the investments, the more the investments, higher the interest or the return on the investments. That is why I like to see these three things. So reserves should be more, there should be borrowings, if possible zero, or less and less as much as possible, and then investments should be more and more. The next one, we should look at competition and the challenges. Companies and the products. It's important to compare the competitors, like who are the similar companies that are producing similar products, and what are their valuations. That you can see from screener.in as well. And then you can also need to look at the management. If the managements are doing good, then the company's direction would be definitely in a good run, or if not profit, at least it doesn't put you in a loss. These information you can find out from the annual reports of the companies. And then risk and red flags. So usually it's very important to understand these risks. Usually these are not easy to find. They are not straightforward. You have to understand the recent news, or if there is anything that has companies decision that taking company into the wrong direction, that could create some problem. And the next one we have is a growth or a future potential. Now, based on whatever we have analyzed, whether the growth is possible in the future, or the whatever the profit or the reserves that company is having, or the reputation is company is holding currently, will be sustainable in the future. And the next one we have is the government policies towards the industries. If the government policies are very favorable to the industry, then the industry will grow really good. For example, if you look at current government policies in India is towards green energy. So therefore, a, if the company is in the green revolution like ethanol blending, sugar industries which are producing ethanol, things like that, that will be more favorable, and also for electric vehicles as well. So if the government policies are favorable to the industries, then the companies within that industries will grow much faster than the industries that are in the companies that are in other industries. Then we should understand the recent news. As I mentioned before, it's important for us to understand the products and news about those products and the management. If any management managerial person or the management is in news, we have to understand what are the news they are into. It positive or is it negative? And then the government policies, as I mentioned, if the government policies are favorable to the company, then company will grow much faster, and then the competitor as well. So if the competitor having some bad problems, that likely affect this company as well. Now I will show you how to find out these recent news that impacting the companies, whether we should invest or not invest. Easy method here in this I can show you is that you just go to Google and type Tata Motors or company name that you want to analyze. In this case, I have taken example of Tata Motors. So if you go here, then you can see, yeah, and if you click on news, and then you can see news that is available, and it's published, like you can also see the time. So based on that news, you can see whether it is good or bad, or you can say if that news is favorable to the company, or if that news is not favorable to the company, and that definitely impact your decision whether or not to invest. Next next one to look at is the technical analysis. So when you do technical analysis, it's more important for a day trader or a short term traders to understand the technical analysis. However, for long term investors or traders, it is important to decide whether to enter or to exit, which is the best time to enter and which is not a good time to exit or enter or anything like that. So let's look at this one step by step. However, this step is not that important. However, we have to look at some parts of it. The first one is to identify the trend. So we use technical analysis to identify the trend, whether the stock movement is upward, downward, it is in the sideways. So if the stock is going in the uptrend and it is reversible, that also helpful from the technical analysis to identify whether it is going up or down. So next step we have support and resistance. If the stock was in the upper trend, then it is also helpful in technical analysis that we can find out the resistance, or if it is in the downtrend, then we can also find out the support from where the stock can getting or the where the reversal is possible. And similarly, we can also have a confirmation if needed, like for example volume confirmation, or the uh, for breaking the support and resistance. Because when the price movement is upward, and if you see there is a resistance in the next level or something like that, then to continue with that trend, the stock needs to have more volume, and then only it is possible to continue with that trend. Otherwise the price will reverse from that particular area where there is resistance. Similarly, it also applies in the downtrend. Next thing we should look at is the one that to find out the momentum of trends. So to identify these, we need technical analysis to do, and then we also need chart patterns to identify, which is very helpful in the technical analysis, which basically tells you when to enter and when not to enter and when to hold. So again, it will also helpful in the stop loss management if needed. More importantly, this is more helpful to the day traders or the short term traders. However, for the long term investor or a one who invests for like more than 6 months or so, the technical analysis is not that important. However, you cannot discount the importance of technical analysis, either it's in the short term or it's in the long term. It is more important to identify the directions of the stock that is possible through the technical analysis for the short term. Quickly, I'll show you how to do the technical analysis from my screen. Um, I will not be explaining you this one very deeply. However, I will be doing this when I'm explaining you the stock analysis for different stocks every week. Stay connected. I will take you to my screen. You can see here in this example, I have taken Tata Motors as an example. So I have used 20-day moving averages, 50 days, and 200-day moving averages. So what I see here is that whenever the stock is above the short-term moving averages, which is 20 or 50, I would consider that's in the uptrend. And if it's below 200-day moving averages, but uh, then I would consider that as in a downtrend. That confirmation is I'm getting from the volume. So you can see the volumes are more than the average. You can see the red candle here, and then there is higher volume, and also the you can see the next candle is in the green. However, looks like this is not sustaining this moment. Looks like it's gonna come down, and also the RSI, which is not in the overbought zone or not in the oversold zone as well. So it's in the middle, and it's in the zone 40. So basically, it doesn't tell you whether to buy or not. So it basically gives you neutral signal. Similarly with the MACD as well. Looking at the graph, what I can see is that there is no up moment or there is no down moment. More likely, there will be a down moment, but there's no confirmation of that, or it's not giving me the proper signal whether to buy or hold or sell. um, the analysis here, what I can see is, for me, is the sideways. However, this is not a recommendation to buy or sell or hold. This is just my opinion, and this video is for the purpose of learning. If you found this helpful, subscribe to Eagle Eye Stocks and tell which stock you would like to analyze in the next video. I will pick a few and walk through the full analysis in the upcoming videos. Hit like if you want more step by step stocks breakdown. See you next time.